Investment alternatives in India, there are many types. Equity shares, one of the best high risky investment. You can add equity shares of excellent companies like L&T, Reliance, Wipro, all IT companies. Okay. Equity investment means you have ownership with the company. That means you can share the profit and assets of the company. There are no fixed returns. There are no fixed returns. It is considered as most risky investment. Debentures, it is a low risk investment. Amount of risk involved in debenture or bond is dependent on the company. With the credit rating, with the help of credit rating, we can decide which bond is suitable to us. We will get the credit report from the credit rating agencies about the company's credit worthiness and whether they are able to pay back the debt, whether they will be able to pay the timely payment of principal and interest. So there are many rating agencies helping out investors to take decision regarding investments. Debentures or bonds issued by ONGC, HPCL and BPCL. Public sector unit bonds. Debentures of public sector banks. Debenture or bond issued by private sector companies or banks. Next investment alternative is mutual funds. Medium risk investment alternative. This mutual fund is professionally managed by a fund manager. He is having a good experience in capital market and he collects money from different investors and he pool the money and he will invest according to the offer document. Asset allocation will be given in the offer document, and in this type an investor can invest small amount of capital. He can start with 500 rupees minimum. Next is safe investment is PPF, Public Provident Fund. Your money will be locked for 8 years and you will get 7.1 interest compounded. This is offered by Ministry of Finance. This is a government fund through which you are getting 7.1% compounded interest. Next safe investment is National Saving Certificate. This is again a government saving bond. It is used for small saving and income tax saving. It is the part of Postal Saving System of India Post. They are issued for the period of 5 to 10 years, carrying 6.8% compounded annually. Next risky investment is gold. The only form of investment which most of our parents and grandparents would believe in. It is considered as best investment in India. That is the only reason why India is having the largest consumer of gold. Medium risk in preference shares. Preference shares are given dividend, fixed dividend every year, and they are given preference when there is a liquidation of company going on. Whenever there is a liquidation, they will be paid off first because the name itself says they will be given preference priority and the money will be repaid first to preference shareholders, then to creditors, and then later on it will be paid to equity shareholders. LIC and general insurance. This is again a safe investment for the security of our life. Okay, there are different types of insurance: money back policy, term insurance, general insurance. Next alternative is highly risky property. When you buy a commercial property or residential property, this is the best form of investment only after gold. Post office savings, safe investment. You can open a post office saving account. Just like a bank saving account, you can open a post office saving account. Many senior people, they still have accounts, post office saving account, and very senior old people have these type of accounts. Next is PD, that is public deposits. This is for 3 years, and minimum it is issued for 6 months and maximum 3 years. Medium risk investment. It is an unsecured deposit invited by companies from the public. So here companies, public companies, they need money. So they are raising money with the help of public for financing working capital needs. They are raising they are raising money from public deposits. You must have seen this scheme, Sukanya Samruddhi account. This is encouraging parents to build future education and marriage expenses for their female child. And the scheme is safe. It provides 7.6% compounded annually interest. This account can be opened at any post office or nationalized bank, or any branch of authorized commercial banks. Next is ULIP. ULIP is medium risk investment. It is insurance along with the equity debt or money market instruments. So this is a hybrid instrument. Along with insurance, you are paying the premium, and the premium amount is invested in the equity, debt, and money market instrument. So this is just like LIC. When you do LIC, the premium is given to the insurance company by the insured. So this premium is not kept with the insurance company. This amount is again invested into equity, debt, and money market instruments, and it also gives you a tax benefit. Investor will get a satisfactory returns if he keeps this amount for 10 to 15 years. What are the different types of investors? When you are collecting the data in the 100 marks project, these type of investors you will find. So you can classify them after you collect the data. If investor is saying that I want safety, I want liquidity, and I want good returns, stable returns, then a person is conservative. These investors, conservative investors, they don't like to take risk. They want comfortable situation, so they don't like risk. They want to protect their amount, whatever they are investing into market. They have very basic understanding of investment. For them, the risk means danger for them. When they make financial decisions, they usually focus on the possible losses. They seek moderate returns, and they do not wish to take more than low level of risk. So they'd like to take only very small risk they want to take, and they get moderate returns because they are not taking risk, so they will be not rewarded with good returns. These type of investors will invest in fixed deposits. PPF, Public Provident Fund. This is a 8 years investment. Okay, 8 years तक investment करना है और 15 years तक lock in है इसका. Contribution amount is minimum 500 or 1.5 lakh per year. 1,50,000 मैक्सिमम इसमें इन्वेस्ट कर सकते हो. एवरी ईयर आप 1,50,000 मैक्सिमम इसके अंदर आप इन्वेस्ट कर सकते हो. And you will also get loan against this PPF. If you want loan, you will get from third or sixth year. From third to sixth year, you can take a loan against the PPF. That means PPF will be your collateral. You will pledge the collateral, you will pledge the PPF, and you will take a loan from the bank. You can take a loan from the bank against PPF. And PPF gives you tax benefit under 80C category. सेक्शन 80C के अंदर आपको 1,50,000 का टैक्स बेनिफिट मिल सकता है. Investment in FD, post office saving account, PPF, etc. These are the alternatives suitable for conservative investors. They don't like to take risk. For them, risk is a danger and they don't want to come in danger. Type B, moderately conservative. Objective: investors are generally a low risk taker and somewhat comfortable with the concept of risk. Moderately conservative, they can take some risk. They have basic understanding of investment opportunities. The term risk means uncertainty. When they make a financial decision, they are more focused on the possible losses, but also they keep in mind the possible gains. So they are positive. Okay. They are prepared to accept moderate level of risk and therefore the uncertainty in the overall capital market. Example is public and corporate deposits. Type C, investor who is balanced. The objective of investor is to make a financial decision. He will be focused on the possible gains, but he will also keep in mind the possible losses. They have a reasonable understanding of investment markets and their operations. The term risk means possibility for them. Conservative investors think that risk is danger. Moderately conservative person says that risk is uncertainty. And balanced investor says risk means possibility. This type of investor will wish to adopt a diversified portfolio to somewhat protect them from the inflation. So they will take a help of diversifying. They will not invest full amount in one security or one company. They will divide their money in different investments and they will get different risk and return in all the different investments. They can accept some level of fluctuation. Volatility means fluctuation in the value of investments. They are a moderate risk taker and can accept some moderate level of investment risk. Example, moderate risk takers are preference shareholders and debenture holders. So these balanced investors, they can invest in preference shares and debentures. For them, risk is a possibility and some level of fluctuation they can accept. Type D, investor is moderate growth. These investors have objective. These investors are high risk taker and they accept higher levels of investment risk. They understand that investment markets can and will fluctuate and it can create impact on income and growth. These investors want to invest in a broad spread of quality investment, but predominantly in growth assets. They take risk as an opportunity. Their investment time horizon is long term, 7 years or more. They are seeking to achieve a reasonably high rate of growth on the capital employed. Example, investment in gold, silver, and shares. So this investor, he says that risk is an opportunity for me and he invests for the long term. This is moderate growth. Type E investor is growth. Investment objective. Investors are interested in capital growth and accumulating wealth more quickly. They understand the cyclical nature of investment and accept that these that there will be high level of volatility in the value. So they accept the fluctuation. Their investment time horizon is long term, 7 years or more. Risk means a thrill. For them, risk means a thrill. When they make a financial decision, they always focus on possible gains. They understand that high is the risk, chance of returns are also high. If they take high risk, they will get a higher return. Example, investment in shares, gambling, smuggling, etc. Difference between investment and gambling. Investment means you have a hope of getting return. Purchase of an asset, purchase of shares, commodities, or bonds. You have a hope of getting benefits in future. Gambling is an event with an uncertain outcome with a primary intention of winning additional money or goods. Returns are stable in investment, but in gambling, it is uncertain and high returns. Sometimes you'll get full loss, and sometimes you'll get good returns in gambling. Risk of loss, risk of losing money is very less in investment. Risk of losing money is very, very high in gambling. And investment is legal, but gambling is illegal in India. Process investment is a continuous process. Gambling is immediate event.